Good morning, everyone, and thank you for attending today's OM Holdings Investor Webinar. My name is Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. OM Holdings Limited is a vertically integrated low-cost manganese ore and ferroalloys producer, and I'm delighted to have OM Holdings Managing Director Adrian Lowe with me again today to run through an investor presentation following the release of OM's first half of 2023 production and market update. So without any further ado, I'm pleased to hand over to Adrian, who will present his comprehensive update. Adrian, over to you.
Thank you. Thanks, Nicola. So thank you everyone for dialing in this morning for our half-year results. I'm just going to jump straight into the numbers, talk through some of the ratios, with a quick market update, and I think we'll probably leave more time for Q&A. And I understand from Nicola that there have been a couple of questions that have already been lodged. So in the first half of 2023, I think it's no surprise that revenue has declined, largely in line with the market. So with weekly prices provided on the website for investors and shareholders who aren't aware, you can find it under the IR section. You can actually see ferrosilicon and silicomanganese prices move almost real time. And so what you're seeing now on screen, the numbers that were delivered in the first half of 2023 are more or less in line with that price decline. So in reality, I think the volumes that we traded or sort of produced and sold haven't really changed all that much. With that decline in revenue, you see a sort of a commensurate decrease in EBITDA as well as profit after tax. So EBITDA more or less halved in the first half of 2023, and profit after tax declined as well. I'll talk more about this in the next couple of slides and sort of try to break down the earning structure. But at this point, I think what's of note, I guess, to shareholders as well, is that we actually consumed cash flow for operations in the first half of 2023. And so this obviously was a bit different from prior years. Having said that, I think if you sort of strip that down and just look at operating profit without working capital changes, so sort of remove all the movement in inventory, then you'll see that that figure is actually more or less not too dissimilar from EBITDA. I think it's just above $55 million generated at the operating profit line. So with all this, we generated 2.59 US cents per share, and I think I will just jump straight into the market because I think you have to sort of see those numbers in the context of what's happening in the broader market. So prices decline continuously, I think, for almost 2 years from the peak. So the peak again, for people who have been with us for a while, was in September, October 2021. And from that point in time, we always knew it wasn't going to last. And with such a huge run-up in prices, that's cost obviously a lot of sort of flushed a lot of cash into the system, one, and two, created an incentive to increase production. And I think we've seen both these sort of play out over the last 2 years. And so, I think we are at some kind of inflection point. I know that I've said that at some point in time in the past, but the price decline has sort of stabilized and slowed in the last couple of weeks. And I think there are a few things that bear paying attention to. So one of sort of the elephants in the room would be what's happening in China, China's steel production, the real estate sector in China, and what the government's trying to do around that. So this is very pertinent for ferrosilicon. And secondly, the power situation in India, because that directly impacts the sort of cost structure of our competitors for silicomanganese. And so I think it's also bear remembering that at this point in time, as prices come down, we are constantly consuming raw materials that were purchased earlier and booking in lower revenues. So, that decline in selling prices will not be matched by, sort of commensurate decline in cost. And this sort of reverses itself, or sort of the situation sort of changes when prices are stable, albeit at a lower level, where there aren't any changes due to time, right? You're sort of literally consuming raw material and selling your output at sort of constant level. So I think that's something that I think is worth pointing out, and we'll probably see it play out, if not in the second half of this year, then more towards the fourth quarter of this year. So this lag effect, I think, is something that we like to emphasize, and that I mention every now and then to shareholders and analysts. So just as an update, there's a lot of text and information in this sort of bottom half of the slide. I'm not going to talk through the numbers. Sorry, not going to talk through the text. But instead, I'll just give a brief update for Q2 first half production for people who missed quarterly. And so, I think this year, at the start of the year, we guided towards something like 350,000 tons production. And so two things have changed since then. We have been able to bring more workers back on board, number one. And secondly, with the sort of commissioning delay in the metallic silicon furnaces, we have actually converted that to produce ferrosilicon. So just on a ton basis, ferrosilicon is more productive, if you will. And so we have been able to push those numbers now up to, I think, a maximum of 400,000 tons. So that's just above 10% increase on the upper range of our guidance. So the numbers are on screen. I think, I wouldn't talk through them, but it's important that in a low price environment, that we're able to sort of squeeze margins and lower our overheads per ton produced. And so I think what we've done in the first half, and what we're actually actively managing now for the second half, is sort of working towards this objective. Okay, so I'm just going to talk very briefly through, how sort of revenue has changed, margins, and as well as the EBITDA structure. So again, like I mentioned in the first slide, a lot of the decline in revenue is purely due to prices. So in fact, if you look at the tonnage traded, I think we're looking at a 1% decrease between first half 2022 and first half 23. And so the earnings compression, again, going back to the point I was making earlier, is largely due to costs sort of not falling as quickly as selling prices. But just given the sort of cyclical nature of just the markets we're in, or even the broader commodity markets, input prices and output prices are highly correlated. And so I think this is something that we'll just have to wash through the system. So if you look at the EBITDA structure, I think nothing has really changed between the first half and the second half, besides the fact that it's actually lower. But smelting still accounts for the vast majority of what we make. I think with some contribution from obviously trading and associates here would be the Chippy Boa mine. And I think it's probably worth noting that the 37% semi-carbonate or the South African origin has been under pressure for the better part of this year. And so I think that's something that has to sort of digest itself, through time, right? And then this is largely done through the Chinese market. Excuse me. So I think the last thing I'd just like to sort of talk about in the slide is, although it looks like a huge decline from the first half of 22 to first half of 23, I think what's probably a better, sort of frame of reference would be what we did in the second half of 2022. And this is because, with the high earnings for the full year 22, in reality, a lot of that, more than 70% of that was actually made in the first half of 22. So if you look at a 2H 22 versus 1H 23 comparison, it's actually just a marginal decline. So I think what we've achieved in the first half is more or less reflecting sort of 2 points. One is that the market has just been in a continuous decline, and two, we've sort of managed to stay resilient, if you will, by making a lot of adjustments to production, to the product type, and to how we're managing raw material. Obviously, during the COVID period and FY22 towards the second half, we were still digesting raw material that we had purchased in the first half of 22, and likewise, the first half of 23, we have been digesting raw material purchased in the second half of 22, and so a lot of that higher inventory cost has been consumed now, and so we look forward to seeing how things will go in the second half of this year. So a short point to note, I think this is the first time in a few years that we've seen an uptick in total debt and the gearing ratio. So I think this is something that we should probably explain to shareholders and investors. And so what has happened between 2.2 and 2.3 is we have, first of all, continued paying down the project finance debt. We paid 18.6 million the first half of this year. So that's a sort of long-term PF facility. At the same time, because of very significant acquisition we made at the end of last year, we have had to sort of top up cash balances through the utilization of sort of short-term revolving credit facilities. And so this is something that's ongoing. It's not a long-term debt. Has to be repaid regularly at fixed intervals, through the year, and that the utilization of that has actually brought up gearing ratios to 0.71, from the 0.6 levels in the last 2 years. So I think when you look at sort of cash flow changes in the bottom left-hand corner, you will see more or less what I've just described. Okay, and so I think that brings us to the end of the presentation. I'll leave you with a company snapshot. You can see all the ratios updated, based on trading 12 months with our latest first half results. And I think it's again worth remembering that the commodity markets are very volatile and ferroalloy markets are volatile. I think it's incredibly important to be able to sort of withstand these cycles. And so shareholders that have been with us, I think, for more than, say, the last 5-6 years, we've seen that what we're doing right now, given market conditions relative to historical performance, is actually a lot better. And I think that's due to 2 points. One, I think we are a lot more familiar with managing inventory and managing our product mix in a very sort of almost real-time fashion. And we're much more in sync with the Southeast Asian markets that has grown tremendously over the last 5 years. 5 years ago is not what it is today. Secondly, I think our power prices have become even more entrenched in the sense that structurally, even just given how bad the Chinese economy is today, when you look at power prices in the north, when you look at power prices in the most competitive ferroalloy producing regions in China, they are still not cheaper, more competitive than what we're paying. And this is, vastly different from how it was a couple of years ago. So I think, this resilience, given where we are in the cycle, actually speaks a lot to how the company has evolved and changed over the last 5 years. Partly, growth on our side, and partly just due to changes in the Chinese power policy, as well as, the structural change in coal prices. So that's the end of the presentation. Happy to take questions at this point.
Thank you, Adrian, for that presentation. We'll now move on to our Q&A section. Our first question: does OM have a dedicated department to liaise with institutional investors?
Yes. So the answer to that is yes. You can contact our IR department, Jenny and Riti, at email addresses and every single announcement. I think you look at the media release, it's there as well. So failing that, drop us a note on the website sort of form. There's a sort of drop down form. You can select IR, and yeah, drop us a note.
Fantastic. Our second question: has the dividend policy been impacted due to lower pre-tax profit for the first half of 2023?
Right. So the answer is no. I think when we, when the board approved the dividend policy, and then when that was sort of deliberated, it was designed to be robust. The idea is to have something in place that will pay something rain or shine, obviously subject to cash flow. But I think that's something that will not change. So the dividend policy remains in place.
Thanks, Adrian. Our next question: the buyer for OMQ are they planning to reopen the smelter and use the furnaces?
Yes, so that's a very astute question. I think It's the first time I'm receiving this one. So the answer is like we can't really share at this point what the plans are. I think maybe just speaking towards speaking to our own plans 12 to 18 months ago, at some point in time, I had this question, and I think I said that there were a couple of options available. One, negotiate something with the government to the extent that's possible, and try to reopen the furnace by some kind of reconfiguration, but basically take the market risk. Two, use the land as is. It's prime real estate. It's 5 kilos away from the port. And three, keep the furnace, but sort of use that as sort of a sideline, if you will, that's sort of generating cash, but sort of focus on the logistics aspect of being next to the port. So I think these options are all open to the new buyer. We are in the process of doing a due diligence with them, and I think we expect that to sort of play out in the next 6 months or so. As far as I'm aware, they are from the industry, so I would hazard to guess that they would still like to do something, that has to do with smelting. So that's probably all we can share at this point.
Thanks, Adrian. And the second part of that question was, why doesn't OM Holdings move the 2 OMQ furnaces to Sarawak?
Yeah, so sorry, I'm just thinking where to start. Just a couple of years ago, there was this company, Gulf Manganese, that tried to move 2 furnaces from South Africa to Indonesia, and I think that wasn't very successful. And the thing is, at this point in time today, the cost structure of a furnace, I mean, let's just sort of strip it down, right? It's the building itself, so civil engineering, that's actually a huge cost component to building a furnace, right? It has to be, solid foundations, able to take a lot of weight, built to a certain height. The furnace itself, the shell, the sort of refractory bricks that line the shell, that sort of insulate the furnace from the hot metal inside. And then sort of what goes above, right? So control systems, raw material feed, the electrode suspension system. I think these are all sort of costs that aren't, you can't easily save cost just moving the shell, right? And technology has changed so much that what we have in Sarawak, the electrode suspension system plus the electrical engineering wiring, it's actually the first, forget the name, but I think it's a laterally compensated system in the world that's running ferrosilicon. So if you just move what we have in OMQ and Tsingtao over to Sarawak, you're not going to get, number one, you're not going to get a lot of the cost savings, and then number two, you're just going to sort of retrofit very, very old technology, shove it into a new shell. So I think that's actually not that helpful. In the scheme of things, you're not going to save a lot, and you might even end up with sort of production parameters, efficiencies that are lower than what we're already achieving in Sarawak. So hope that answers the question.
Thanks, Adrian. That was a good, thorough answer to the question. Our next question, does OM Holdings have a ESG policy, and can you make sustainable alloy metal?
Right. So that's there are 2 parts to that question. I think yes, we do have ESG policies. We have filed, I think, for the 2nd year running, our sustainability report or sustainability statement. So this year, I think we have managed to get assurance on CO2 emissions for Scope 1 and Scope 2. We are working towards Scope 3. It is sort of tough nut to crack. It's a lot to do, but I think for our industry, Scope 3, is just minuscule compared to what we're emitting for Scope 1 and Scope 2. A lot of the targets, a lot of the policies that we have in place are disclosed in the ESG sustainability statement, and we do have a slide in sort of a standard presentation deck on sort of the key targets for every year. So I think that the sort of key focus areas for us are on the environmental side, as well as the social side. I think being listed since 1998 on the governance side, I wouldn't say that's not an area of focus, but that's something that we've always done. On the environmental side, we're focusing on emissions into the air, on the ground, so solid waste, as well as water sort of pollution levels, right? And so these are all addressed in detail in the sustainability report. And on the social side, I think we're trying to do a lot of integration into Sarawak. When we invested in Sarawak, we had maybe 80% foreign workforce, and that sort of flipped around to become maybe 20 to 30% foreign. And so that's something that upskilling, developing a sort of long pipeline for talent in the region is something we're focusing on. The second part of the question was on sustainable alloys. Was it, Nicola? Yes. So thanks. So on that front, I think it's difficult to sort of put a label to ferroalloys that we're producing and call it sustainable, because that's not an area of focus for our customers at this point. A lot of them are asking for just standard Scope 1, Scope 2 reporting, especially steel mills in the US and Europe. And this is something that will have to change, I think, in the next 1 or 2 years with CBAM in Europe. I think we'll have to report. Our customers will have to report the CO2 footprint for the alloys, very, very soon. And so I think until such time that sort of monetary value becomes attached to the carbon footprint of our alloys, it's difficult to, put another way, it's not as meaningful to call our alloys sustainable until there's some kind of monetary gain to be had from that. But otherwise, I think we are in a position to attach CO2 emissions to every ton of product that we sell, actually. And that's something that we will work towards doing, in the next 1 to 2 years' time.
Thanks, Adrian. Our next question is, what is the company's short and medium-term outlook for the Chinese steel market, given OM Holdings products prices are determined by these market forces?
Right. So I would say ferrosilicon prices are very much affected by the Chinese steel industry and sort of by extension the real estate industry. So in the short term, it's surprisingly robust. I think if you look at sort of future prices in the last 5 to 7 days, there has been significant uptick in iron ore futures, as well as met coal, coking coal, and metallurgical coal prices. And so that's all reflecting a lot of news that has been put out by the Chinese government. I think a lot of new laws or sort of policies around real estate, around mortgages were released in the last 5 days. I was just in China a couple of days ago and sort of saw this sort of play out in real time. And I think that there's real excitement on the ground. So that's probably a reason why, we're seeing this short-term euphoria, I guess, in the commodity markets. That said, it hasn't really translated into alloy prices. And again, this speaks to the sort of disjoint between demand and supply, right? In the last 2 years or so, I think it was largely a sort of demand-led price increase. And right now what we're seeing is just a supply side driven bearishness for alloy prices. And the reason for that is just there is no shortage of alloy producers in China at this point in time. The idle capacity is there. It can be switched on. It just happens that, they are not as competitive and find that it's more meaningful to turn that off. But you can see that sort of reflected in futures prices. For manganese alloys, I think it's not as relevant to look at China. We should probably look at countries like Ukraine, India, as well as other sort of manganese alloy producing countries.
Thanks so much, Adrian. That does appear to cover the majority of the questions from our audience today. If you do have any further questions, please forward them to info@corporatestorytime.com. This concludes our webinar for today. So thanks everyone for attending, and thank you once again to the OM Holdings team and Adrian for the update. Thanks, Adrian.
Thank you. Thanks everyone for dialing in.